Hi, this is Zach here with the Bulletin Board Heroes on Friday, the 18th of May, and focusing today on some of the big recent rises, big charts as well. First of them, Bushveld Minerals, where you can see that we had the near vertical move higher for the stock in the middle of March. Obviously, that followed the high move higher the previous March as well. So long term or longer term bull situation here. In the near term, you see the way that on retracements we tend to get the new lows higher than the old highs. So still very strong indeed. So the favourite scenario here is that we probably don't go much below 20 pence on any dip, and over the next 3 to 6 months we could head as high as the top of the of last year's trend channel at up to 38 or even 40 pence by that time. So still looks as though there's a lot to come for Bushveld. Now onto a stock which has been rather enigmatic over its time on the stock market to date. Maybe that'll change. Obviously peaked out last September rather painfully. It looks as though it's this gathering or regathering its bullish momentum. The situation at the moment is that one would hope that while above the 50-day moving average at 13.3 pence, we could get back towards the 200-day moving average and last year's resistance line at around the 21 pence level over the next 1 to 2 months. Any dips towards the 50-day line currently regarded as a buying opportunity. Obviously, sub 10 pence would not fit in with any bullish scenario at the moment. On to private investor favorite, or one that divides, I suppose, opinion, but private investor favorite for most. Macango here, very bullish situation really since this gap higher that we had in November, unfilled gap, which is a telltale sign of bullishness, catching the bears by surprise. We've had a bit of consolidation in recent months, but so far over the course of May, holding above the 50-day moving average at 7.8 pence. And really, while we're above that, we're looking for a new leg to the upside, at least retesting the best levels so far around 12 pence and hopefully up towards 15 or 16 pence, the top of this trend channel from last summer over the next 3 months or so. Going on to another bullish situation, well, a recovery situation, I suppose, which seems to be gathering some pace, and that's PCG Entertainment. Obviously, been a rather painful chart over well, I suppose, until the turnaround in March, April. Current situation is that we were looking for the stock to break the 200-day moving average. That's currently at 0.28 pence. If we can break that, then we would retest the main resistance that the stock has towards 0.5 pence. Not probably worth risking much more than below the 50-day moving average of 0.2 pence at this stage, and obviously back below the bottom of this broadening triangle of 0.15 would negate any idea of recovery or lasting recovery. On to maybe a happier and easier situation here in terms of recovery that we've seen. A lot of controversy as well, I suppose, but Pathfinder Minerals looks like it's on its way. We had a gap below the 200-day moving average of 0.97 pence earlier in the month, and now a gap through it, which both of which are obviously by definition very bullish events. Best case scenario here, a target at 1.8 pence at the top of this rising trend channel from the end of November or October rather, and at this stage we'd ideally would not want to see any end of day close back below the 200-day moving average at 0.97 pence. One of the recent rises this week on good news was and is Seeing Machines, currently at the top of this rising trend channel from October, just above 9 pence. The ideal scenario here is that after a bit of consolidation, we might even get a new leg to the upside. That could be as high as 18 pence, which is a resistance line projection from the middle of 2016. That could be seen over the next 3 to 4 months, and basically only back below 8 pence, which was the resistance area in November, would really question or suggest that we're topped out for now after a very strong run. Stock which still seems to have some gas in the tank is SDX Energy. Here we've got a rising trend channel a sharp recovery here since the beginning of April, actually before that. I've got a rising trend channel currently based around the 70 pence level. If we hold above that over the next couple of sessions, we could see a best case scenario target here as high as 85 pence. Finishing off with a stock which has been in the limelight in terms of being a potential recovery situation after the really strong rally that we had at the turn of the year, and that's Vela Technologies, just breaking this resistance line from December around the 0.5 pence level with the 200-day moving average as well. That's the black line, and really while we hold above the 200-day line at 0.52, we could see some or all of the losses from that December-January peak through 1.5 pence recovered over the next 2 to 3 months. If you're cautious on the stock, probably wait for break back above 0.8 pence, but it does look as though the shares are or have delivered a decent bear trap rebound from below 0.4 pence and could have decent momentum on the upside. That's it from me. More updates early next week.